Pretty crazy day today in the market. We can see Nvidia was down roughly 8%, AMD was down roughly 1.6%, Amazon was down 3%, Tesla was down nearly 3%, and Palantir from its overall daily high was down roughly 6%. So on today's episode, I kind of want to take a closer look at what's happening with the overall market, share my overall thoughts, and also 5 companies that I find pretty attractive right now in the semiconductor space. So let's take a closer look. But like always, if you want to get daily semiconductor news, make sure to check out whatthechiphappened.com. Link is down below. So let's get started.
I want to thank The Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode.
All right, so based on this heat map, we can see that the overall tech market was down. We have big players like Amazon down roughly 3.6%. We do see that a big blunt of this force was taken by the semiconductor industry. We see Nvidia down roughly 8.7%. We see Broadcom down roughly 6%, and some other players also kind of seeing this pain. Now, I want to start off by some of the key reasons for the stock market decline. The first thing is the confirmation of new tariffs here for Canada and Mexico. President Donald Trump confirmed the 25% tariffs on imports for Canada and Mexico effectively tomorrow. And investors obviously were hopeful for a last-minute compromise to prevent these tariffs. And obviously, tariffs increase the fear of trade disruption, higher cost of U.S. businesses, and potential kind of repercussion tariffs from Canada and Mexico that can kind of start off a trade war. So I talked about this in the past. The market hates uncertainty. And when you start to see things like this, it becomes more uncertain of how the market can evolve in the next few weeks, in the next few months, in the overall year. So obviously, like I mentioned, this is a broad economic concerns. Tariffs generally lead to higher costs for businesses and consumers, potentially slowing economic growth, which at the end of the day is not the greatest thing for the overall stock market and for stocks in general. Concerns have also intensified about broader economic impacts, including rising inflation and reduced corporate profits. So again, it's just so many concerns and so much uncertainty that brings a lot of pressure to a lot of our stocks. And obviously, a lot of this is right now driven by the AI craze. So you're going to see kind of companies that deal with AI chips to kind of take a biggest blunt. So tech stocks, especially semiconductors and AI related companies, faced heavy selling. As we saw, Nvidia was down more than 9%. Now, we did see kind of other tech names also take quite a hit. Now, some of the performances were kind of crazy, right? It's not just the overall it's not just individual stocks. We saw that the Dow Jones was down roughly about 1.8%. The S&P 500 was down roughly 2%, turning negative for the year. And you kind of saw the Nasdaq, which is more tech heavy, down about 3%. Again, pretty much driven by this huge technology shares negative sentiment. Now, again, it's all about sentiment and uncertainties, like I keep saying, and it does seem like investors are now kind of switching to a risk-off mode, selling equities broadly. And this is, in my opinion, where kind of your investment thesis takes place, right? If you're just a shareholder of a company expecting the market to just go up, these are the days you get pretty worried. Now I'm just going to share my overall thoughts, and my overall thoughts might seem very simple, but the simpleness works for me, right? I'm not here trying to time the market. If you watched all my previous videos, you guys know I'm a long-term investor, and I'll kind of use Nvidia as an example. So maybe you as a viewer who might be as bullish as Nvidia as I am can see my thought process in your own thesis. So the first thing is, do my companies face extra competitive pressure? Will these tariffs, for example, make Nvidia a weaker company than its competitors? Most of the time, the answer is going to be no for the companies that I own. I do know that these kind of sentiments will create a lot of negative reaction. It could maybe slow down the cycle a bit. But I mean, if you've been in Nvidia for multiple years, you do know that there is a cycle, not just in the semiconductor space, but in the overall tech space, either driven by over inventory corrections, even driven by macroeconomics. So as someone who has experienced a nice amount of these cycles, I tend to have realized that buying during red days is great for me. one thing to also understand is I never know when the last red day will be. So never dump all my money at once. So if I see red days like this, and maybe I expect more volatility, I might throw in some money in the market this week, maybe some next week, maybe the week after. I don't tend to do it on a day-to-day basis because then that would obviously eat up all the cash that I have, but kind of use my cash wisely and be able to understand that there might be another dip next month, maybe next week, so on and so forth. Now, I've seen various cycles, like I mentioned earlier, money in my portfolio, and this is what helps me kind of be okay with portfolio cycles like this. Money in my portfolio is not money I need anytime soon. So I'll just ride the wave. I rode the wave during the COVID, during the 2018 tariffs, and all the other cycles we've seen since like 2015. And so it's something that I'm not trying to time, and I have lived through it. And again, this is a red day where maybe some new investors might be worried a lot. So I just want to share my overall experience to maybe help them out a little bit. Obviously, if you are a more experienced investor, obviously a lot of this is just going to seem like simple portfolio management skills. And I'm going to say NVIDIA wasn't one of my best buys because I bought on the right up. It's because I added on the way down, and I bought when the market was completely bearish on companies like NVIDIA. And that's why I tend to enjoy at least bearish markets if we're going to get to them. I'm not saying we're in a bearish market, but I tend to enjoy them better because valuations are definitely more attractive. And we're going to see some of the numbers in a bit. The final thing is, it is crucial to understand if a company is more growth based or the valuation is more growth based and the stock is being valued for future growth, then those are more likely to take a higher hit, right? For example, your quantum, your AI plays, they will see heavier hits than kind of maybe your more mature players. I mean, we can see IonQ, a company in the quantum market, down 6% today. And in the past year, let's just look year to date, the stock is down roughly 46%. Oklo down 12% in the nuclear market. Year to date, it is doing amazing, but from its peak, we can see that we kind of saw in February 7th, the stock is down roughly 47%. SoundHound, another one, down 4% today. Year to date, the stock is down roughly 48%. Obviously, my favorite company right now, NVIDIA, it is very excited about the semiconductor space. And right now, I'm curious to see how far we are from its peak, about 23%. I'm also going to be curious here for Microsoft, right? How different is some of my growth in like a growth player like NVIDIA different from some of these tech players? And not much, right? Microsoft from its overall peak a year is down roughly 17%. As we saw, NVIDIA was down 23%. So we can see certain stocks that are a little bit more heavily hit in the market right now. And those are the ones that are really facing the pain. So now I also want to kind of take a closer look at 5 stocks based on current valuations. And remember, these valuations are based on analyst expectations, but to me look cheap in the long term of things. I don't own necessarily all of them. I think I own 4 of the 5, but NVIDIA on forward PE ratios right now trading at 25.4. I don't think we're going to see a slowdown in AI investments right now, but if we do, obviously that can go lower. AMD forward PE ratio, again, about a year from now, is trading at 20. In my opinion, very cheap. Lam Research, a company that is in the semiconductor equipment space and can grow with the memory market, 20 PE ratio as well. The next one is Alphabet. I think Alphabet is my favorite Mag 7 at the moment in forms of valuations and growth opportunity. Forward PE ratio of 18.58. Next, we have Synopsys. This is a software-based company. They normally trade at a higher PE ratio, but Synopsys right now at 29.73 looks very, very attractive. Again, I'm not saying I'm going to load the truck on all of these at the same time, but I do believe these are all for a nice entry position. Hey, if maybe I won't go with my full position, but at least a third of my positions, maybe a half of my positions, because I understand the market can go lower, but I do believe at these valuations within the future, they will increase my overall investments. So I would love to hear from you. What are some of the stocks you're planning on buying during this market crash? Maybe this is the time when we start to see maybe more bearish cases in the stock market. We're definitely going to see a lot in the comments of, hey, look, the bearish market is here. AI is a bubble. I mean, I believe there's a bubble in certain stocks. That's why I probably don't talk a lot about companies like SoundHound, but there are players that are definitely benefiting from the AI race. So let me know your thoughts in the comments below. Take care, have a good day, and be careful out there.